Good morning, friends. Important video on recent changes. Digest of recommendation made in 50th GST Council meeting held on 11th of July 2023. So I'm going to discuss all the important changes one by one. I will share the document and discuss each of the recommendation which is made by GST Council in the 50th meeting held. Let me share my screen first. So this is the document press release, and we are going to discuss each of the component one by one. When this meeting started, a short video film titled GST Council 50 Steps Towards a Journey was presented before all the members of GST Council. In this 50th GST Council meeting, important recommendations are relating to changes in GST rate, measure for facilitation of trade, and measure for streamlining compliances in GST. These are three broad categories. Going forward, there are recommendations relating to change in GST rate on goods. I'm not discussing individually what are the changes. This document is available in description box, which you can download and check the effective changes in GST rate for specified goods and specified services. But some of the things which is very important and which we must take a note of it. Like item number 3, look at the item number 3. It is saying that they are going to clarify that supply of raw cotton, including kala cotton, by agriculturists to cooperatives, it's taxable under reverse charge mechanism, RCM, and to regularize issues relating for the past period on as-is basis. So this is, there are 2-3 points. Let me clarify one by one. That what GST Council is recommending, that we are going to regularize GST on supply of raw cotton, including kala cotton, by agriculturists to cooperatives, only cooperatives. So if it is to any trader, firm, private limited company, and they might have procured this raw cotton from agriculturists, or even through a commission agent, specifically in the state of Telangana and Maharashtra. This benefit is only extended when it is being supplied to cooperatives, first part. And what is the meaning of as-is basis? 2 important points. For the past period, yes, RCM was applicable. But in case cooperative has not paid RCM liability, then they need not require to pay taxes. And in case they have paid taxes, then they can't demand refund of those taxes are being paid. So as-is basis means no liability for the past period if you have not paid RCM liability, and no refund if taxes are being paid. So summary is that if you have paid the taxes, then no refund would be granted. So in GST, we are finding those who are litigating the matter, they get benefited. And those who pay the taxes, but if it is being recommended like this, that no RCM in the hands of cooperatives, then this question is quite obvious. We all are asking, if somebody has paid the taxes, he must be refunded back. But this is a broad issue. I'm not discussing at length, but this is specifically when supply of raw cotton, including kala cotton, by agriculturists to cooperative. So this is the meaning of as each basis. Similar is the way item number 4. And this document is available. Again, I'm repeating in description box, which you can download and read for your immediate digest. GST Council has decided to reduce GST on imitation jari thread or yarn, known by any name in trade parlance, from 12% to 5%. So they are also regularizing this particular transaction for the past period as its basis, meaning thereby, if you have not paid the taxes at the rate of 12%, you have only paid 5%, then there will not be any differential demand, no liability for the past period. It is regularized, and henceforth rate reduced from 12% to 5%. In case you have paid 12%, now it is regularized and 5%, then no refund would be granted. So this is the meaning of as each basis. So I'm not discussing individually for change in specified goods or services, but I wanted to clarify what is the meaning of as each basis. Having said that, let's move to the changes in services and important changes in services one by one. Let's start the first one. As a trade-friendly measure, and this is for GTA, Goods Transport Agency. If GTA want to opt for the forward charge mechanism, they have to file specific annexes, annexes 5, and time period we know that normally it is 15th March of the preceding financial year. Now they are saying you need not require to file financial year wise. Once you file your declaration, it would be applicable for next financial year and subsequent financial years, unless you want to revert back and want to opt for the RCM. So clarity, no need of filing year wise. Once you have an excess file for the forward charge, it will continue for the next year and subsequent financial year. Good one. You can always file your declaration when you want to revert to the RCM. GTA got benefited. And good one, procedural ease of business. Coming back to the third point. We know that director providing services to the company, and when director providing the services to the company in the capacity of director, then RCM applicable, reverse charge method applicable in the hands of company by notification number 13/2017. But dispute watch that in case there is a person, let's say Bimal Jain, who is director of the company, and he's providing services to the company as director in the capacity of director. He's not employed. So let me clarify one by one so that you get a broad clarity. If director working as an employee of the company, then quite obvious, employee related emoluments, salary, it's out of GST entry 1, schedule 3. Neither a supply of goods nor supply of services. Second, when director is not employed and there is no 192, section 192 income tax TDS deduction as salary, so they are professional. As a professional capacity, they are providing services to the company as director. then RCM applicable in the hands of company. Second point. Third point, what happened if director is also providing certain other services, including renting of immovable property? So maybe director is having some property, commercial property, and it is being let out to the same company. And then company is paying rent to the director. Whether this rent is subject to RCM, this was the issue which is now being recommended, and it is clarified in the past. You can watch my videos on saying that this is not subject to RCM. It is chargeable under forward charge method in the hands of director as a landlord, supplying services to the company. Of course, he will get threshold relaxation for getting registration done, 20 lakh rupees. That benefit would be available, aggregate turnover, but it would be under forward charge method and not subject to RCM. Hope you got this recommendation clearly digested for you. Coming back to food and beverages in cinema halls. So whenever we are going to watch a movie, we take a lot of food and beverages. And question watch, if I'm going to watch a movie and my ticket is more than 100 rupees, then GST charge at the rate of 18%. Whether the same 18% going to be leviable on food and beverages when you are purchasing while watching the movie. This was the issue. Clarity and clarification. They are saying they would be delinking now. So movie ticket separately for watching movie, 18% if price is more than 100 rupees. But for food and beverages supplied and separately charged, please be careful, separately charged, then this would be 5%, not 18% in the example I have taken. And 5% as a restaurant services with no ITC. Only caution you need to keep in your mind, if it is not separately charged and it is composite supply. So movie ticket, including food and beverages, no separate bifurcation, then it is going to be composite supply and would be taxable on the basis of principal supply, which is movie. So in case you want to get this benefit, you need to bifurcate into two components, movie and food and beverages as a restaurant services, but keep in mind 5% restaurant with no ITC. Go down further. Now the clarity has been provided. Recommendation, whether clarity or burning topic, that GST on casinos. So casinos in Goa and Sikkim, they must be watching this information for their digest. Horse race and online gaming. Now recommendation is being made. What is the recommendation? Look at these three important points, that they are going to make a suitable amendment in the law to include online gaming, whether this online gaming of skill or chance, this bifurcation is being done away with. So the Karnataka High Court judgment, Gamescraft, quashing so-called notice for 21,000 crore rupees, that game of skill cannot be equated with betting and gambling. Everything is being done away with now. Online gaming, horse racing is now going to be included as if it is taxable, and suitable amendment going to be made in Schedule 3. So that amendment will come. And second important point, it is going to be taxed. So casino, whether in Goa or Sikkim, horse race or online gaming, whether online gaming of skill or chance, going to be taxed at 28% GST. But interesting point, this 28% now going to be applicable on face value of chip purchase in the case of casinos. When you go to casino, they give you one chip when you're entering into the casino. So whatever price they are charging face value, that would be chargeable at the rate of 28%. For horse racing, it is on full value of bets placed with bookmakers or totalisator. This is what 28%, and even 28% on full value of the bets placed in case of online gaming. What this online gaming industry is representing, and they have represented before GST Council, they have said that let's say we are getting 200 rupees from the participants who are joining for online gaming on their platform, 200 rupees. And then by prize money, they are disbursing 180 rupees. They are paying back 180 rupees to the winner of that particular game. Only 20 rupees left out in the hands of online gaming platform. So they're saying we are earning only 20 rupees. So GST should be levied only on this commission or amount which is being earned by online gaming platform. Now, recommendation is totally different. 28% going to be levied on full face value of bet, which is 200 rupees. Now, this is a matter of debate in the industry for the survival for online gaming industry. And there's no bifurcation that online gaming for skill or chance. That is what the recommendation all about. Going further, there are certain measures taken for facilitation of trade, certain facilitation provided. Important one, the formation of GST Appellate Tribunal. 6 years of GST gone, and we all know that GST Appellate Tribunal is not formed as yet. Yes, for the formation of GST Appellate Tribunal, corresponding provisions are being inserted in the CGST Act, White Finance Act 2023. Now they are saying that there would be specific rule for GST Appellate Tribunal for appointment and condition of service of the president and members. And they are going to notify the provision made in CGST Act and other respective state GST Act effective from 1st of August 2023, so that same can be brought into the operation at the earliest. That is what they are talking about. But here, 2-3 things I would like to highlight here. Whatever amendment and substitution is being made in the GST law, that is again matter of debate in trade parlance. We are all debating. What we are debating first, there's no provision that the lawyer can be appointed as a judicial member. And this may be one of the issue which may again go back to the High Court as a writ petition. Second one, principal bench is going to hear the issues related to place of supply. It is being considered if place of supply related issue will go to principal bench, they might get overburdened for the region. Let's say there are issues, and issues involve multiple, let's say credit, let's say registration, and place of supply is one of the issues therein. Whether it will again go to principal bench, and if it is going to principal bench, then it looks like an apprehension is being created that this principal bench going to be overburdened. Third, digitization and transition. Now we are starting this GST Appellate Tribunal after 6 years of GST implementation. We want complete digitization, automation, starting from e-appeal and e-hearing hybrid mode, physical and virtual, and e-order by the GST Appellate Tribunal. and transition from existing tribunal to GST appellate tribunal. We have to look at those aspects. Rules are supposed to come. Let's wait and watch. But these are the concern area which we are discussing for the formation of GST appellate tribunal. Second important one. Now, when we file 9 and 9C, so annual return is GSTR 9. And for composition dealer, it is 9A. First, relaxation. If you are a registered person and your aggregate turnover up to 2 crore in 22-23, financial year 22-23, then you need not require to file GSTR 9 for regular registered person and 9A for composition dealer. For composition dealer, threshold is otherwise 1.5 crore. Second benefit they have given that there was certain relaxation given in some of the tables of GSTR 9 and 9A. In case you have to file 9A because aggregate turnover is more than 2 crore in 22-23, then same relaxation which was given in financial year 21-22 would be extended for financial year 22-23. Third, which is not there in the recommendation, but for your digest. A flyer is being issued very recently, and as per flyer, they are saying if you are a registered person and your aggregate turnover is up to 5 crore, then quite obvious, you will file your annual return. 2 to 5 crore, you will file. But what about self-certified reconciliation statement, GSTR 9C? As per this flyer, they are saying they need not require to file GSTR 9C if aggregate turnover is up to 5 crore in financial year 22-23. So they are required to file only when your aggregate turnover exceeds 5 crore rupees. There is another video also on same, so you can watch that video with the reduction in late fees. Is there on my YouTube channel. These are the big topic. So that's the reason I'm, summing up in brief. But these detailed video, you can always go back to my YouTube channel and watch. So this is pertaining to 9, 9A and 9C. Coming back to now, GST Council has recommended to clarify through a circular when ISD going to be applicable and when cross-charge going to be applicable. Let me tell you this, ISD and cross-charge are two different concepts. ISD, input service distributor, is applicable only when, let's say you're having head office in Delhi and you got 4 factory in 4 different states, and we all are registered having separate registration number and the same PAN number. Now, head office may be procuring lot many common input services, which is being used by these factory in different states, registered separately. Now, head office is only procuring common input services pertaining to usage by respective factory in 4 different states. Then the concept of ISD, input service distributor, was there in pre-GST era under service tax. Same is going to be applicable in GST scenario, because in this ISD concept, head office is only procuring common input services and not providing any services to the factory separately registered in 4 different states. That's the concept of ISD. What is cross-charge? Supply of goods or services between distinct person and the same PAN number in the course of furtherance of business, which is called deemed supply entry to Schedule 1, even without consideration. This is called cross-charge. And in cross charge, it is being considered as if head office is providing services. There's element of service in the hands of head office providing services to the branches or factory registered separately under same PAN number. They're distinct person. So this issue is again a big debatable issue. Like you know that there are AAAR from Columbia Asia Hospital Cummins India Limited, that is a deemed supply dispute pertaining to valuation. I'm having my separate video on my YouTube channel, so you may watch for detailed version of this. But why this recommendation? This is the important one, right? We have seen in the trade that some of the taxpayer, instead of taking ISD registration, they were transferring the credit through a mechanism of cross charge, which is not the right approach. Hence, Council has recommended to clarify that ISD should be made mandatory if it is only procurement of common input services, which is used by recipient unit, then ISD is mandatory. You cannot follow the concept of cross charge. And for concept of cross charge, you need to be supplier of service, separate registration. So ISD registration and cross charge are two separate concepts and separate registration requirement in GST law. All right, go further. Item number 4, very interesting. And let me first clarify, then I will explain what they are going to clarify by way of circular. I'm a manufacturer. And when I'm selling goods, supplying goods, I undertake a warranty, in warranty, to be provided to the customer. And for this in warranty, which is FOC to the customer, free of cost to the customer, if any defect happen in the product supplied, then this manufacturer undertake to supply even components and parts with no consideration, because in warranty is already included in overall pricing of the product initially sold, and on that GST is being charged. So at the time of providing in warranty services, manufacturer either providing to the customer directly or through their service franchisee. So component and spare parts are being replaced along with the services. And for that, no charges are being taken, no money is being taken from the customer concerned. There is one issue which I have personally handled, and let me tell you, one of the authority from CGST was debating that they were saying that whatever parts and component used for providing in warranty services, ITC need to be reversed. GST input tax credit need to be reversed. I've explained to them, and we have tried to convince them that there is FAQ for different sectoral perspective, and clearly said when in warranty is already included, the cost for providing in warranty already included in the pricing of the product initially sold, and on that GST already being paid, it is not FOC. So there is no need of reversal of ITC on that component and spare parts provided for in warranty services. Now this is being acknowledged by GST Council, and hopefully this circular will clarify that no GST on in warranty services provided there is no consideration, and no reversal of ITC also on spare parts and component, which is being used for in warranty services. But important point which I want to draw, when there was FAQ, frequently asked question, endorsing the same recommendation which is being given by GST Council, why such issue is being raised at first place as a matter of litigation. Are we all not accountable for good and simple tax? And why it should reach to GST Council for the recommendation? There were FAQ issued by CBIC should have been adhered by all this field formation, but nevertheless, good one. Coming to item number 5. Circular to be issued to clarify various refund-related issues. So first one, you know that concept of Rule 36 sub-rule 4, whereby credit is restricted to a specified percentage of eligible credit auto-populated in GSTR 2A. Initially, it started with the 20%, then 10%, then 5%. But this Rule 36 sub-rule 4 got omitted from 1st January 2022. 1st January 2022. So what they are referring now, that for refund of accumulated ITC under section 54 subsection 3, which was earlier to be looked into from GSTR 2A perspective, is now not required. Effective from 1st January 2022, now they will look at this ITC in GSTR 2B. That is the change, and circular will clarify this particular point. B, they are going to make changes consequent to explanation got inserted in Rule 89 sub-rule 4. So they are saying that the value of export of goods to be included while calculating adjusted total turnover. So there's a nominator and denominator. So whenever you are claiming refund of ITC on export of goods, the formula of calculating pro rata refund. So value of export of goods, nominator, divided by adjusted total turnover, and adjusted total turnover will include value of exported goods. That is what the change they are talking about. Now, clause C. If you go back to Rule 96A, it talks about that you must receive your export proceeds for export of goods or for export of services within a stipulated time period. But in case you have not received the money export proceeds within the stipulated time period, what will happen? Then the concept which is being stated in Rule 96A, if you have taken refund, then it need to be remitted back. Vapas dena padega. But in case you have received this export proceeds after the stipulated period, then quite obvious you are entitled and eligible. You should get the refund. So they are going to clarify that admissibility of that refund on export proceeds received after the stipulated time period. Good one. Item number 6. Circular is going to be issued for TCS liability, tax collected at source, under section 52 of CGST Act. In case we are multiple e-commerce operator, and TCS is applicable only when goods or services are being supplied through e-commerce operator. But what happened? If for a single transaction of supply of goods or services or both, there are multiple e-commerce operator, will there be multiple TCS application? So they are going to clarify through a circular. Come back to Rule 46 clause F. And what it is saying, just read it. To each compliance burden of the taxpayer, Rule 46 clause F to be amended to provide for requirement of only name of the state of the recipient, only name of the state of the recipient, and not the name and full address of the recipient. on tax invoice. Only in case of supply of taxable services by or through e-commerce operator or by a supplier of online information database access retrieval service to an unregistered recipient. Now, item number, serial number 8, interesting one. The tagline is issuance of following circular in order to remove ambiguity. So ambiguity is going to be removed and legal dispute on various issues, thus benefiting taxpayer at large. So come back on the first point. They are going to clarify when a particular registered person whose turnover is exceeding the prescribed threshold for generation of e-invoicing. So compulsorily, mandatorily, generation of e-invoicing threshold started with the 500, 100, 50, 20, 10, 1st August 2023. They are required to issue e-invoice, but only issue, and which was a matter of debate in the trade, do we require to generate e-invoice when I'm raising such e-invoice to the government department, establishment, government agencies, local authorities, or PSU, etc. They are only registered solely for the purpose of TDS deduction. So they are not actually regular registered person. They're only registered for the TDS purpose. So when this invoice is being raised by supplier to such government organization who are registered solely for TDS purpose, whether generation of e-invoice would be compulsory or not, a clarification going to be provided. Come back to clause B, that calculation of interest. And as we all know, section 50, subsection 3, if we have wrongly availed the credit and utilized the credit, then only interest is going to be levied at the rate of 18% per annum. 18. There's a doubt of 24% also in the market. 18%. And that too with retrospective date, July 1, 2017. First. But issue was, and this is going to be clarified, if I have wrongly availed IGST credit, and listen very carefully, very interesting one, wrongly availed, then as per manner of utilization, I'm supposed to exhaust my IGST credit. It is compulsory on GST and Common Portal. If I have wrongly availed IGST credit, but by default, I need to exhaust my IGST credit first. So it is assumed as if it is utilized. So question H, whether interest going to be levied when I'm having enough credit lying in my other e-credit ledger, which could be CGST, SGST, and IGST. So what this taxpayer is saying, sir, I got enough credit lying in my e-credit ledger totaling together. But since IGST credit wrongly availed, but I have utilized because of your compulsion, otherwise I've got that much amount which I've utilized, got enough credit lying in my these three e-credit ledger totaling together, then it is as good as I have not utilized the same. Hence, interest should not be levied as per section 50, subsection 3. With retrospective date, July 1, 2017, laudable one. They're going to clarify interest is not going to be levied in this transaction. Hope you're getting clarity. I'm trying my best. These digests are already, press release is already there in the market. I'm trying that you should really digest these provision for your better understanding. If you're liking it, put your comment. If you're having something to ask, put your comment. I will try my best that I can extend this clarification and reply to your queries. I'm trying my best to make GST as good and simple tax. And thanking, these are the laudable recommendation by GST Council. So another one, they are going to clarify mere holding of securities of a subsidiary company by holding company cannot be treated as a supply of service and therefore cannot be taxed under GST. Good one. Then what about corporate guarantee, which is the burning topic? Sometime holding company or director of the company is extending a guarantee to the banker for giving loan to the subsidiary company. Is it supply of service? If it is supply of service, what would be the valuation? We all are looking for the clarity in the matter. But that is not being touched on, only this part. But the disputed one I have raised for our understanding, and we all are looking for the clarification. If my video goes to the GST Council Secretariat, they must look into this matter. Now come back to the difference of credit availed in GSTR 3B versus GSTR 2A. You all know that the circular number 183 dated 27 December 2022 got issued, which was initially meant for 2 financial years, 17-18 and 18-19. Now, as per this recommendation, they are saying it will be extended for 19-20, 20-21, and then until 31st December 2021. Because with effect from 1st January 2022, 2B is important. 2A is not important. So they are saying the benefit which is given in circular number 183 is extended till 31st December 2021. Now, circular, you must be recalling that if amount is up to 5 lakh rupees, differential 2A versus 3B credit up to 5 lakh rupees, you can take certificate from the suppliers and submit that certificate. If it is more than 5 lakh rupees, of course, you have to take certificate from chartered accountant and cost accountant for detailed process which is being prescribed in circular number 183. But 2-3 things I would like to highlight here. Of course, if this benefit is extended, this circular benefit is extended for subsequent period till 31st December 2021, laudable one, no problem. But there was Karnataka High Court judgment in the case of Wipro India Limited. When this recommendation was not there, even Karnataka High Court has said that the benefit which is being given, the process which is being prescribed in circular number 183 can subsequently be extended for subsequent financial year, 1920. Next question, which is again boiling today, and we all are discussing, whether GSTR 2A is really relevant and to be checked when I'm availing credit. I have made separate video on saying, for availing credit, only we need to satisfy as a buyer, as a recipient, you should have tax invoice, receive goods and services. Your supplier must have paid taxes. You as a recipient or buyer regularly filing GST return. There was no condition of 2A. But reconciliation is required, of course, to substantiate. And there's a Supreme Court judgment, Bharti Atal, clearly saying 2A is only facilitation. But this is what circular, if circular is giving benefit to you and you can get those certificates for submission to the proper official, you may resolve the litigation. You need not require to go back to litigation. So laudable one. Coming back to Tran 1 and Tran 2. As per Honorable Supreme Court, Philco Trade Center, special window was given until 30th November 2022. But what happened? You have filed your Tran 1, Tran 2, and that again got rejected. by the proper officer. Can you file appeal? This special window was open as per the Supreme Court judgment, Philco Trade Center, but there may be possibility that your transitional credit by Train 1 and Train 2 got rejected. You need to file appeal. And these filing appeal, they are saying now there would be manual process, and you can file your appeal through manual process. And to that extent, they're going to make amendment in Rule 108, Sub-Rule 1, Rule 109, Sub-Rule 1, manual filing. Amnesty scheme, very interesting. Lot of, relaxation was given through amnesty scheme. If you have not filed your GSTR 4, 9, 10, revocation of cancellation of GST registration and deemed withdrawal of assessment order, based judgment order under Section 62. This amnesty was available till 30th June 2023. Now extended to 31st August 2023. And again repeating that for this amnesty, I have made separate video and link is being provided in this document. You can go back to this, my video and check it out, how these amnesty can be availed by you, which is now extended till 31st August 2023. Perfect. Now for Manipur, you know the situation in the Manipur. So if there is a due date for filing 1, 3B and 7 for the month April, May and June 23, date is going to be extended till 31st July 2023. Now coming back to major for streamlining compliances in GST. eBay bill for movement of gold and precious stones. There is specific relaxation. No eBay bill required in terms of Rule 138 sub-Rule 14 of CGST rule. But now they are saying this will be made compulsory, mandatory for movement of gold and precious stones falling under Chapter 71. And also it is being recommended that if some state want to implement this eBay bill, generation of eBay bill for movement of gold and precious stone for intra-state movement, they can also implement the provision accordingly within state transaction. Now, recommendation as made by group of ministers on capacity-based taxation and special composition scheme. For prescribing a special procedure to be followed by manufacturer of tobacco, pan masala, and other similar items. Inter alia for registration of machines and for filing of special monthly returns. Now coming back to the broad third item. Certain amendment going to take place and to strengthen the registration process. We all know that a lot of fake registration, around 70,000 registration are identified as a fake, and out of which they're talking about 17,000 is found to be real fake. Suspicious was 70,000 around, and 17,000 found to be fake, and good chunk of government revenue is being lost because such person, unscrupulous person, has taken fake registration by using PAN card and Aadhaar card of economically weaker sections or other person, and passed on the fraudulent credit to the unscrupulous recipient or buyer. Special drive is going to complete on 15 July 2023. In the context of there are so many fake registration and government want to strengthen the same, certain process an amendment now being identified and recommended by GST Council. So what are those changes? Amendment in Rule 10A. It is talking about now you have to give details of your bank account in name of pain of the registered person, and it must be furnished within 30 days of granting of registration or before filing your statement of outward supply in GSTR1 or invoice furnishing facility, whichever is earlier. So furnishing of bank details registered in the name of PAN holder. Second, there would be system-based suspension of registration, system-based automatically, in case you have not furnished the details of your valid bank account as stated under Rule 10A within the time period prescribed. System-based suspension. But again, once you provide, then there would be automatic revocation also of that suspension. There is amendment in Rule 59 sub Rule 6, and Rule 59 sub Rule 6 was meant that if you want to file GSTR1 for the current tax period, you have to ensure you have filed GSTR3B for preceding tax period. You must be recalling that. Now they are saying it is again subject to submission of details, valid bank account details as per Rule 10A. If you have not given, then you will not be allowed to file your GSTR1 or invoice using invoice furnishing facility for current tax period. There would be amendment in Rule 9 and Rule 25, and interestingly, now they want to done away with a requirement of presence of registered person, applicant, may be registered in case they are going for checking the physical verification of registered person or new registration, in that case applicant. So compulsorily they need not require to see the presence of applicant while they are going for physical verification. Recently, you must be knowing Delhi High Court has said they can't do physical verification without having presence of the applicant. So with this amendment in Rule 9 and Rule 25, they are doing away the physical presence. So we have to be very, very careful. Department may come for the physical verification even though you are not available in your premises. So when you are filing your application for registration, you need to be careful about, at least for the specified time period, till the time registration is being granted. So if they are coming for the physical verification, and you have to keep watch, whenever they are coming for the physical verification, they need to update on the portal that they want to initiate physical verification. But at what time, whether you are available or not, these are again subjective point. But this is what the change they have brought in Rule 9 and Rule 25. Now, coming to item number 5. Recovery of tax and interest in terms of Rule 88C. You know that discussion, my video is available, but let me again clear your doubt. If you are filing your GSTR1 and showing your liability, let's say 10 lakh rupees, as against 1 lakh rupees. Originally, it is 1 lakh, but you have mentioned 10 lakh rupees in your GSTR1 versus taxes paid through GSTR3B, which is quite obvious, 1 lakh. There would be difference of 9 lakh rupees, right? Which is being considered as a self-assessment tax. Rule 88C, which got introduced on 26 December 2022, it is clearly saying that department going to issue a notice in Part A, DRC 01B. And you need to reply within 7 days. Either you pay this differential tax or reply suitably within 7 days, part B of DRC 01B. But if you don't pay differential amount and don't reply, then recovery mechanism. And that is what the recovery mechanism they are going to insert by way of rule 142B and form GST DRC 01D for recovery of that differential amount 9 lakh rupees. Video is available. You can watch. Let me tell you, now you have to be very serious about. Difference between 1 and 3B, the self-assessment tax, can be recovered even without issuance of so-called notice. Recovery mechanism is being provided. Process is being defined. Yes, we can always argue and debate that if I have made mistake in GSTR 1, I have option of rectifying such omission or error by 30th November of next financial year, following the end of relevant financial year. But in case you got the notice, you need to respond back. That is the caution and responsibility. If you are not replying within 7 days, so keep watch on your portal whenever you get notice and reply suitably so that they are not initiating recovery proceedings. Of course, legally, we can always debate. We can always say section 61 is also having for scrutiny of return, Smt 10. And thereby you can also reply. So I'm not going into those legal arguments. I'm only giving caution and precaution to all of you. Wake up call for all of us together. Sometimes this difference happened intentionally, and we have seen in the past that certain unscrupulous person used to file one with excess amount to pass on the credit to the buyer, but paying the lesser tax through 3B. To stop them, this mechanism was envisaged. But there are genuine and honest taxpayers. Sometimes they make mistake and clerical error. You can always explain in your reply part B, DRC 01B. You should be knowing about it. And quite obvious, if it is mistake, then it may happen once or twice. If you're habitual, then you're doing this problem again and again, then be careful. Time has come. Wake up call. Hope clear to all of you. You can watch my video on this point as well. Coming to now, 2A has no relevance from 1st January 2022. 2B is relevant. So if availing credit in 3B, then 5th condition which got inserted under section 16 subsection 2 is your credit which is availed in 3B must be checked and cross-verified with GSTR 2B. But what happened? If there is difference of credit reflected in 2B versus availed in 3B, and that exceeds specified amount, a percentage which may be 20%. So they are going to clarify and mechanism how such difference is going to be cross-checked, verified, and corrective measures need to be taken. So difference of credit coming in 2B versus credit availed in 3B exceeding the specified limit. And this is one of the restrictions you'll be recalling for your supplier under section 38. Again, repeating another video on my YouTube on this point as well, which you can watch. Now, those who are not filing 9 and 9A, of course, if it is up to 2 crore, no need to file. 9A up to 1.5 crore, no need to file. Composition dealer. But if it is exceeding 2 crore, 9 is required to be filed. But in case you are failing, you are not filing, then they are going to improve discipline and they will send you the notice in form GSTR 3A to file your annual return as well. Rule 64 going to be amended along with form GSTR 5A to require online information database access retrieval service provider to provide details of supplies made to registered person in India in their return 5A. This will help tracking due payment of taxes on reverse charge basis by such registered person in India in respect of supplies received from online information database access retrieval service. Now, explanation, which is going to be inserted in Rule 43 of CGST rule, and it is pertaining to pro rata reversal of GST input tax credit pertaining to exempted supply. What would be exempted supply now? The value of supply of goods from duty-free shops at arrival terminal. Please, arrival terminal, when you're coming from Germany to India, international, and you are purchasing some goods from duty-free shops in international airport, to the incoming passenger, Germany to India, now going to be included in the value of exempt supplies for the purpose of reversal of input tax credit, common credit. So wake-up call now need to be looked at prospective, unless it is worded as a retrospective. To my mind, it is going to be prospective. Sub-rule 3A going to be inserted in Rule 162 for prescribing the compounding amount for various offences under Section 132 of CGST Act. Council is also recommending insertion of new rule, Rule 163, to provide for manner and condition of consent-based sharing of information of a registered person available on the common portal with other system. Have you heard of concept account aggregator? See, we are filing our GST return on GST common portal, right? And then we file our PL account and balance sheet to the bankers to get the loan. And we have seen for getting loan from the bank, we are filing PL account and balance sheet. Sometimes we have seen these figures are increased to get excess amount of loan, and which was not available to the banker to cross-verify. Wake-up call. Now, these accounts aggregator can take the information from GST common portal to cross-check what actually and exactly your outward supply sell on GST portal on which you're discharging GST liability, so as to cross-check to what level you can get and what amount of loan can be extended to you. So if you are doing such mistake, wake-up call. This window is now being opened, and this new rule 163 is going to provide manner and condition of consent-based sharing of information of registered person available on common portal with other system. Come back. Insertion of clause CA in subsection 1 of section 10 of IGST Act. Very interesting one. Place of supply. I have made many presentation in different seminar and webinar, and I got lot of confusion pan-India. Of course, for B2B supply, when I look at 10(1)A of IGST Act, then place of supply where supply involves movement of goods, then place of supply where delivery terminates, right? So we always, from Delhi to Maharashtra, we always say interstate IGST leviable. That is what we are saying. What happened for B2C transaction? Let's say Maharashtra consumer, not registered, coming to Delhi and purchasing goods over the counter. Whole India in confusion. and mostly are following intrastate CGST and Delhi SGST. I have reminded in the past several times with this, wrong process followed. Lot of consuming state are losing out their revenue. If consumer coming from Maharashtra and purchasing goods from Delhi over the counter, B2C transaction, ultimately goods are going to be consumed in the state of Maharashtra, right? Then Maharashtra should get SGST component. Am I right? Because GST is a destination-based consumption tax. But those consuming states, we are losing out the revenue. And there is specific provision in GST law, Rule 46E. In case of B2C supply, supplier must require to mention on the tax invoice if value of supply is more than 50,000 rupees. Believe me, it was there. Now they are going to insert new clause CA in section 10 subsection 1 of the IGST Act. And I'm sure now they are going to say if amount is more than 50,000 rupees, then compulsorily supplier has to capture name and address of the recipient with a state code, which is Maharashtra in my example. So what you were charging earlier, CGST and Delhi SGST, it is now going to be IGST with the state code Maharashtra. SGST of IGST will accrue to the state of Maharashtra. This is what this recommendation all about. Hope you will see all these changes. So I'm just explaining to all of you. The last point for today's discussion. Group of ministers on IT system reform was also discussed by GST Council. Group of ministers has recommended various measures to curb fraud in GST through system-based measure for strengthening the registration process in GST, more use of third-party data for risk management, and controlling flow of fake ITC down the supply chain required. And that is how the recommendation, and they will come out with many measures and process in this regard. So I'm through with all the press release. Let me stop for sharing, and then I've tried my best to give you the digest of this recommendation of 50th GST Council meeting. Circular is supposed to come. All changes in GST rate pertaining to goods and services as recommended. It is from a date of notification. It is not applicable from 11th of July. It is from a date of notification first. Second, wherever they are saying a new rule going to be inserted or amendment going to happen in CGST rule, it is only through a notification. So notification will come, and that will talk about what is the date of amendment or insertion. So it is only recommendation we are discussing. Third, so any circular which they are clarifying for many things, trade facilitation measure, ease of business, compliances, circular are always considered as a clarificatory in nature. And such clarificatory circular can always be considered even for the past period, as per settled Supreme Court jurisprudence. That is how it is being understood in legal parlance for clarificatory circular. Nevertheless, this 50th GST Council meeting has done a lot of transaction, except online gaming, horse race, and casino. For horse race and casino, I'm not saying much, but for online gaming, it's a matter of big debate in the trade parlance. I tried my best to make digest of these recommendations. Given my input to all of you, hope you're liking it. Put your comment at least in a comment box. I must see that after seeing this 1-hour video, you have got maximum of understanding of GST. I've tried many things, and this Document is also available in my description box with the YouTube link of relevant videos which I referred during my deliberation. Thanks for watching. Stay tuned and for keeping updated on GST law. What you need to do? You need to subscribe our YouTube channel. You need to, put that notify button. So whenever any new video gets uploaded, you are notified immediately. And of course, with this process, we are trying sabka saath, sabka vikas. So I'm trying my best. Aapko acha laga hoga. You must have liked this video. Thanks for watching. If you have liked this video, you may share with your all professional colleagues, brother and sister, taxpayer, even those are from department watching me from GST Council Secretariat. They can also, look at the component which I did discuss, which is again work in progress, expectation of trade, industry and commerce. Thanks for watching. Stay tuned. Thank you very much.